Eli Lily, ticker LLY. Had it set up on a mean reversion strategy, daily chart. You can see it squeezed with the Bollinger Bands inside the Keltner channels, and then it broke out of that. 1, 2, 3, 4, 5 days above the Bollinger Band before it had an inside day, and that's what we're waiting for. First the squeeze, then the breakout, and then you need to wait for the inside day, meaning the body of the candle, otherwise known as the open and close range, is inside the previous day's high-low range. So you can see I marked that inside day high and low, and so I was expecting it to mean revert, right? Come back down to at least the 20 period moving average, that green line. It did break down, started to mean revert down below the low of the inside candle, but then that strategy failed, and the following day it broke above the high of the inside candle. So instead of a mean reversion trade, we got stopped out on that one, and pretty much immediately entered into the breakout trade. Okay, breakout of the inside candle. So that's been working for 1, 2, 3, 4, 5, 6, 7, 8 days, and I've been in and out of it ever since, at least a few different times. I'm currently in the trade. I re-entered after this, 4 days of consolidation, and then it broke out of that. So I re-entered that yesterday. You can see it broke above that white line there. That was the high of the consolidation, and then it broke out yesterday, and luckily continued today. It's at 10.52. I have a 10.40, 10.60 call debit spread, so a $20 wide spread that's going to be worth $2,000 per contract as long as it expires above 10.60. And I have 16 of those contracts, so it's a pretty big position. So yeah, basic point of this video is to show you that the mean reversion trade turned into a breakout trade. This is the daily. Now we're going to see what it looks like on the hourly chart. Here's the the inside day zone. I'll draw a trend line to make it a little bit more clear how the breakout occurred. Okay, somewhere around there. So basically we can say on the mean reversion strategy, you can use that on any time frame, but it was setting up on the daily here. You mark the high and low of the inside candle, and then you come down a time frame. So if you find the setup on the weekly, you drop down to the daily. If you find the setup on the daily, you drop down to the hourly. And if we did that, you can see where to enter the mean reversion below that line here on that candle, on that red candle that broke below the white line, and it failed. It came back up into the zone. Okay, I wouldn't exit for a loss or anything just yet. I would wait for it to break above the inside candle range. That would be my stop. Okay, but then that's also the immediate entry for the breakout. So if a mean reversion trade fails, it could turn into a breakout. If a breakout trade fails on the breakout setup, then it could turn into a mean reversion trade. And then up higher here, you can see on the lower time frame, the hourly, that it's consolidated. And here about It broke above that. I took the entry, and it's continued higher.